Welcome back to EDU-Tutor. Today we're going to be looking at January 2020, Paper 2, Principles of Accounts. All right, so let us begin. This paper has 5 questions and we're trying to do all 5 questions in this video. Question number 1 says, suggest one reason why a trial balance must always be balanced. All right, so we know that because transactions require both a debit and a credit entry of equal amounts, right, our trial balance will be equal. Number 2, identify 2 errors that are not revealed by a trial balance. So sometimes our trial balance will not be correct. So we have errors that affect our trial balance, and we also have errors that do not affect our trial balance. This question is asking us which one of the errors affect our trial balance. So you can go ahead and identify any 2 of the errors that you know will affect your trial balance. So what I'm going to do, I'm going to list a few of them for you, and in your exam or when you're doing it on your own, you can choose to list any of the above. So we have errors of omission, errors of commission, errors of original entry, errors of principal, and compensating errors. Now B, the following balances were taken from the books of Henry Pisa at the beginning and end of 2019. So they gave us a list of accounts and their balances at the start and at the end. Required, using the information given on page 4, answer the following questions. Calculate the opening capital, which is capital on the 1st of January 2019, and the closing capital, which is the 31st of December 2019. Now, how do we calculate capital? What is the formula to calculate capital? Assets minus liabilities. So we're going to identify each item, which is an asset. So let's write an A beside our assets. So bank is an asset, cash is an asset, machinery is an asset, accounts receivable is an asset, equipment is an asset, and inventory is an asset. Now loan and accounts payable, those are liabilities. So we're going to total all our assets and then subtract our liabilities from our assets. So I'm going to go ahead and list those assets. So we have bank, cash, machinery. Accounts receivable, equipment, and inventory. Now we're going to pick up those totals that you see beside them. So we're going to work the opening inventory first. So I'm going to go ahead and pick up those totals first. All right, so I want you to put those in your calculator, and we're going to total our assets. So you should get $54,050. Then we're going to list our liabilities. So we have loan and accounts payable. Loan is 54 and accounts payable is $1,625. What is our total liabilities? Total liability is $7,025. And since we're listing it from our total assets, we will get a figure of $47,025 for our total capital. All right, so that would be our capital, $47,025. Now that was our opening capital. We're going to do the same thing now for our closing capital, but please remember that these figures will change. So to save on time, I'm going to see if I can paste those over here. All right. So all right, so those are our assets. We're going to add those assets together. So let's put down our figures. So bank is 2,000. Then we have 500 for cash. Machinery should be 23,300. Accounts receivable is 1,000. Equipment is 10,600. And the last one is 7,500. So just like what we did on the other side, we're going to total our assets. So we're going to say total assets. $44,900. Then we're going to go ahead and list our liabilities, which is a loan and accounts payable. Our loan is $1,150. Our loan is $3,200 and our accounts payable is $1,150. So we're going to total our liabilities. So our total liabilities here will be $4,350. And then we're going to go ahead and list our liabilities from our assets to give us $40,550. So if you have any questions on this, you can comment below and I will answer your questions. Now, what was a net profit or net loss for the year? All right, so now it's asking us, what is the net profit or net loss for the year? And that we can determine using our opening and closing capital. So remember that if our capital increased, that would mean that we made a profit. But if our capital decreased, that would mean that we made a loss, right? Because if you remember your balance sheet, the section that says financed by, you're going to start with your opening capital and you would add profit to it or subtract your loss. So we're going to look at our opening capital and which one is smaller. So we notice that our opening capital is larger and our closing capital is smaller. So that means that we made a net loss. So we're going to go ahead and subtract our closing capital from our opening capital. So opening capital minus closing capital is equal to net loss. So go ahead, pick up those figures. We have $47,025 minus $40,550 is equal to, when you put those into your calculator, you should get $6,475. All right. So that would be your net loss. So when you're doing your question, ensure that you label it as net loss. Now, what was the total value of non-current assets at year end? What was the total value of non-current assets at year end? So we're going to look in the question for our non-current assets. So we know that bank is a current asset, cash is a current asset, machinery is non-current. So we're going to pick up machinery of 23,300. And then we're going to go ahead and look for the others. So we have accounts receivable, that is a current asset, equipment, that is a non-current asset, inventory is a current asset. So we only have machinery and equipment. So equipment is 10,600. So we're going to pick up that. And then we're going to total those figures. Alright, so this should be 10,600. Now, when you add 10,600 plus 23,300, you should get 33,900. All right, so that is your answer for that question. All right, so we're almost there. How would inventory at the 31st of December 2019 be classified on the statement of financial position? So, what do we classify inventory as on our financial statements? It is our current assets. Which item is a current liability? So let's go back up. Which one of those items would be a current liability? We have two liabilities there. We have loan and accounts payable. So which one would be a current liability? Accounts payable is the answer. Now calculate the working capital at the start of the year. So we're going to have to pick up our current assets and our current liabilities. All right. So we're going to pick up our current assets and our current liabilities. So all the other assets would be current assets. All the other assets would be current assets. So we have bank, cash, receivable, and inventory. So we're going to add up those figures here. Your bank amount was 3,800. You could label, so you could say current assets, and also put your dollar signs. Your cash figure would have been 1,900. Your accounts receivable figure is 1,850. Your inventory figure is 9,000. Now your total current assets would be 16,550. So if you put those in your calculator, you should get 16,550. I'm going to put a line beneath so you know that I added those figures. And then I'm going to do my current liabilities. We only have one, which is accounts payable. So we list that current liability from our total assets. Since we only have one, we can go ahead and do that. So that's 1625 or $1,625. So I'm going to draw my line. Remember that this figure should be subtracted from the asset figure. So let's put our brackets so that you know that that is what should be done. All right. Now, when you do your subtraction, you should get $14,925. Now, in the table in B on page 4, accounts titles 1, 2, and 8 are current assets, right? List the name of the current assets in order of liquidity. So they said 1, 2, and 8. So we're going to go and look for those. So we're listing bank, cash, and inventory in order of liquidity. So which one can be turned into cash first, right? So we're going to have to start with cash because cash is already cash, right? So we start with cash. Then we know that bank would go next and then your inventory. All right, so that is the order of liquidity of those three items. Now, what term describes the reduction in the value of an equipment? So when assets lose value over time, what do we describe that as? That is called depreciation. The next question says, how much money is owing to the firm at the end of the year? How much money is owing to the firm at the end of the year? So at the end of the year, our accounts receivable figure is $1,000, and that is the money that our customers or the firm's customers is owing to it, right? So therefore, that is the figure that we're going to pick up. You can identify that that is the accounts receivable figure. Accounts receivable figure. Now, what term is used to describe the business if it can pay its liabilities as and when due? And we describe that as solvent. So the business is described as solvent. All right, so those are the answers for number 1 of January 2020, paper 2. question paper, right? If you want answers for the rest of the questions, please look above. I will put the link above the video. All right. Thank you for watching.